Well, it's almost upon us. We're about 45 minutes away from the release of USDA's supply and demand report for the month of November. And I'm joined right now by Brian Hoops, the president of Midwest Market Solutions. He's in Springfield, Missouri, or based there. And Brian, I've been talking about the estimates for the production here for corn and soybean production, but haven't talked too much about the ending stocks estimate that'll be coming out from USDA. Now, they have U.S. ending stocks and then they have world ending stocks. For the U.S., the average trade guess is hovering on corn around 1.48 billion bushels, soybeans 360 million, and the wheat at 581 million. Now, that soybean number in particular would be up a fair amount from what we had here last month. Do you think that is even high enough or not?
Yeah, that's a little bit larger than what I had submitted for my estimates, Marlon. I didn't think the USDA would be real aggressive in lowering soybean export forecast. And unless you think there's going to be a major yield adjustment, I think this ending stocks estimate's a little bit overdone. USDA has been very, very conservative last year. If you remember when we had strong exports and they were increasing our export forecast, it was a belabored approach, very slow, methodical. And I have a feeling they're going to do the same thing on lowering exports. We're just only 2 months into this new marketing year, and it's just probably too early to make major adjustments. But, certainly the soybeans likely to increase. The question will be is how much. Corn numbers, I think, will be down actually from last month because of stronger ethanol demand. So minor yield adjustments could leave us with, just a little bit smaller ending stocks number for the corn. So this will be the last production figures we see until the January final report, but they will update demand numbers in the December supply and demand report.
Now, on the world ending stocks estimates, it looks like the trade generally thinks the corn will be not too much different than what USDA had back in October at 301.4 million metric tons. Soybeans, though, they think it'll be up about a million at 105.7, and the wheat basically in line with what we had a month ago. It might be, maybe 100,000 under. So the world ending stocks, does that have potential to hold a surprise in the report today or not?
Well, yeah, the world numbers for wheat have been very strong, and that's what wheat has been rallying off of. It's not so much that we're exporting a lot of wheat, because we have not been. Our sales are very slow. The wheat numbers on a worldwide basis are tight, and if we see them continue to get tighter, that's a signal that the wheat market's going to take another leg higher. Soybeans likely to increase a little bit. Corn stockpiles also could increase a little bit. That'll mute some of the bullishness for the wheat market if, in fact, that does hold true.
Well, let's look at our current prices ahead of the report release. We'll go to corn and our quotes provided by bar chart. Still weak in the knees here in the corn. It seems to be spreading. There for a while, it was mainly in the December contract, but now they're all across. December down 3 1/4 at 5.48 1/4. March down 3 cents now at 5.58 per bushel. On our soybean market, we'll go to that January contract, and right now it's down 5 1/4 cents at 11.83 1/4. That would put us just a penny from our low of the day at this point. Meanwhile, in Chicago wheat, December is 2 3/4 cents higher at 7.70 3/4, so it's hanging on to small gains. Kansas City wheat up a penny at 7.81 3/4. Now, it had been lower for a good share of the morning. It's firming up just a little bit here. We're back within about 6 cents of our overnight high. Spring wheat trade, December now 10 1/4 higher. Look at that, 10.19 per bushel, back within 2 cents of its overnight high there. And in cotton, we're up 130 points now, with December up at 117.85 cents per pound. The high of the day was just one tick short of 118 cents. And if you look at that oats market, we were intrigued by that this morning. We had huge losses in the last 2 days, and it's kind of moderating somewhat today. December oats, last time we checked, they were down about 3. Now they're down 7 1/2 at 7.16 per bushel. We'll come back and talk with Brian Hoops about our cattle and hog market activity right after these messages. Well, let's take a look at live cattle prices and see what the futures are doing right now. And on the live cattle board, we're lower across that board, with December down 7 cents at 132.02. So pretty quiet actually there. February, though, down 42 cents. We're at 136.70 right now. That would be 35 cents from our earlier high that was set this morning. And if we roll over to the feeder cattle market, Even with the weaker corn, feeders are still struggling. January down 72 cents. We're at 159.57. And you know that's just one tick over $1 off of our earlier high of the day. Right now, we're within about 40 cents of our low of the day. On the March contract, we're down 52 cents right now. Lean hogs. We now have the lean hog December contract $1.17 lower. We're at 75.20 per hundredweight. Well, that's only one tick from our low of the day. February down 52 at 78.85. Let's go back to Brian Hoops and talk about this for a little bit. The livestock trade, you know, we had the cash cattle market really rallying on Friday, gaining a few dollars over what we had the last couple of months. And it sounds like asking prices today are maybe a couple dollars above that, Brian, but the futures don't seem to show that strength. Now, what gives? Who's going to win out here anyway?
Yeah. You know, right before we came on, I heard some cash bids in Nebraska at 130. Those are being passed. And now we've seen some 132 trade in Nebraska. So numbers a little tighter in the north at this point, I think, and kind of a reversal of what we saw in the last several weeks where numbers were real tight in the south. So it looks like Nebraska trade, maybe at least a string of cattle here, is going to lead the cash markets higher. But that 132, if we can trade that in the Southern Plains, futures are going to be a little undervalued and should reverse course and move higher. I think we're concerned about boxes not finding a real bottom here and moving higher. They're more mixed, choppy type trade with a mixed close yesterday and waiting for the updates to come out this morning.
Well, I wanted to visit with you about the latest weekly export sales numbers. In last week, China bought quite a bit of pork. They were back in there in a big way. Just real quickly, do you think that they'll return this week, or do you think that's it for a while?
Yeah, I would suspect they'll continue to be buyers at these price levels of our pork products. We're moving a lot of product, and we certainly need to be doing that. That's going to help us out longer term, and I think it's going to be bullish, and I think they'll be back in the market once again.
Interesting. Well, Brian, thanks for all the information. Appreciate it. And Brian Hoops of Midwest Market Solutions. Janet, it's all yours.